This is Tolan Peterson with My First Place Northwest. Today we're going to be talking about potentially borrowing against your 401k to purchase your first home. So as a lot of you guys probably know by now, we offer a pretty large array of different type of down payment assistance programs that one can utilize when purchasing their first home. However, there are generally income limitations that come with utilizing these programs. So essentially, if you make X or more, these programs are not available to you. So a lot of people that end up attending our classes end up fitting into this criteria. They make pretty good income. They surpass the income limitations that the state allows to take advantage of these different down payment assistance programs. So they're kind of stuck. They're in a situation where they don't have the down payment at the moment, but they really want to buy. They don't have access to these programs, and they're concerned that if they wait an extended period of time in order to save a down payment, that prices are going to continue to rise, as well as interest rates may also continue to rise. And they may be priced out, or even if they're not priced out, they may just end up paying a lot more per month than they would if they could buy today. So what a lot of people have been doing that have been attending our classes lately, they've been borrowing against their 401ks. So what does this entail? A lot of people say, well, I don't want to pull money out of my 401k because I don't want to pay all the hefty penalty fees that come along with doing that. So if you were to actually liquidate funds from the account, you'd be correct. You would potentially come under having to pay some of these penalty fees to the IRS when you go to pay your taxes. However, borrowing from your 401k, or borrowing against your 401k is a little different. Essentially what you're doing is you're borrowing funds against the 401k. You're paying interest on these funds, but then this interest, when you repay the loan, is paid back into your account. So you're essentially paying yourself your interest. So you're kind of being the bank in this instance. You're being your own bank, you're being your own lender. So when people kind of weigh the options of, would they rather wait an extended period of time to save this money, or would they rather borrow from their 401k? 99 times out of 100, people are saying, wow, that's an awesome program. I'm definitely going to take advantage of that. So the disclaimer there is that I'm kind of citing the rules, I guess, as they're described by the federal government. However, you want to definitely check with your Human Resources Department to see if there are any other stipulations that you have to meet. Generally, when you're borrowing against your 401k to purchase your first home, there aren't really any limitations to the amount of money that you can borrow, obviously within whatever you have in the account. But your Human Resources Department may put overlays on that and say that you can only borrow X. So definitely double check with your Human Resources Department if this is something that you're thinking about utilizing. But again, it can put you in a much stronger position. It can potentially put you in a position where you can buy today. You may even be able to borrow enough to put down 20% and avoid mortgage insurance. So definitely a lot of different advantages to this program. If it's something that you think is a good fit for you. So that's all we have time for today, guys. Thanks again so much for listening as always. If you found any value in this information today, please don't forget to like, share, comment, subscribe. Help us spread the word. And if you're considering buying your first home and you'd like to gather more general information about the process, please go to our calendar reservations page and sign up for one of our free first-time homebuyer workshops. Thanks so much.